have you ever heard of the term petrodollar?
Petro? No.
So back right after World War II, the winners, Britain, U.S., they all got together and started this monetary system called Bretton Woods, right? Because the first two world wars started because of what's happening right now, where it's fiat currency is not tethered to gold. So it's called free floating fiat. So they're just floating in terms of value, just trading against each other in the market. And the marketplace kind of dictates the value. And then that's what leads to war, because if it's not tethered to gold, then all these countries are just printing money, and it's just kind of like a race to the bottom in terms of inflation, right? So when Bretton Woods came out, the deal was this: the U.S. dollar would be tethered to gold at $35 an ounce, I think, or was it 24? They changed it, but let's just say $35 an ounce.
Okay.
And then the rest of the world would trade against the U.S. dollar, right? And then when that happened, 1945 to 1971-ish was like the golden era of the United States in terms of the world, actually, because monetary systems made sense.
Mm-hmm.
But what the U.S. did was they still kept printing money, and then to the point where in I want to say 70 something, or was it 1970 something? I think they went off the gold standard. So they said at one point they're like saying, so we're not going to be tethering our money to gold anymore. And then right after that, that's when the petrodollar started. So what the U.S. did was in the 1970s, this was back when the CIA had a lot of activity in the Middle East because the U.S. was trying to secure oil deals. So OPEC, they're the conglomerate that supplies oil. What the U.S. did was they made a deal with them. They said, you're not allowed to sell oil to anybody unless they buy it with U.S. dollars. So that's where the term petrodollars came from. The USD is the petrodollar.
Right.
And so if you think about all the little wars and skirmishes that happened in the last 50 years, it's all around the Middle East. It's all around the oil producing nations.
Yeah.
So what the US has effectively done is basically they're the mafia, and they started a protection racket. So they're like, we're gonna protect your supply routes. We're gonna protect your pipelines. In return, you're gonna enforce the fact that you can only accept payment in US dollars.
Okay. So they basically switched from like valuing their money against gold to against oil, basically. But then since they're controlling the oil and they weren't controlling the gold, then it basically just becomes a monopoly, essentially.
Yeah, so because that's the only way they can kind of enforce demand for US dollars. I mean, if you don't have to buy US dollars to get oil, then what's the use of US dollars, really, right?
Yeah.
So that's what happened. So they're operating this protection racket for like 50 years and forcing everybody to use USD to buy oil. But Russia just went off that. They're like, fuck you guys, we're gonna use euros.
Yeah, that's interesting.
Yeah,
so I think a lot of that stuff's gonna change. Like, I think pretty rapidly in like the coming years, just because of all these like Bitcoin essentially, but just all the new platforms and everything, like social media, just the internet, like all that. There's just so much more connectivity everywhere, and it's so much easier to move money around and trade currencies, and all the other economies are growing so fast that it's really just separating the U.S. out. I mean, it's not going to happen overnight, but I think we're definitely in the early stages of that happening.
Yeah, 100%. So that's why the U.S. is like starting to get into a tough spot right now. And like the more I learned about this stuff, the more I realized that their policies start to make sense. Because remember, I told you the other day, like part of Biden's plan, which I thought was stupid, they wanted to raise the minimum wage to like $15.
Yeah.
Right. And then the Fed came out saying that they're targeting a 2% interest rate. So separately, I didn't understand what these things meant. But once I figured out what was going on in terms of U.S. debt and bonds, it started to come together. So what it basically means is like, if you're a country and you owe $100,000 to me and a bunch of other countries, right? But we all transact in your dollars. The way you can eliminate or reduce that debt without paying it off is through inflation.
Right.
Because the value, if you create more dollars the dollar value of your debt stays the same, then in effect you've just made the value of the debt smaller, right?
Yeah.
So that's what the Fed is doing. So because the U.S. debt is kind of like untenable right now, it's just massive, gargantuan. So they're trying to inflate their way out of it right now. So if you raise the minimum wage to $15, and you print a whole bunch of stimulus, like they're doing the 1.9 trillion now. In the summer, they're planning another 3 trillion. Right. So you're putting more supply out in the open. You're paying people supposedly more money, and then that's more tax revenue for you, and supposedly more economic activity. right? So they're just trying to inflate and GDP their way out of that debt right now.
Yeah. So now that $100,000 or whatever that you owe to the other country, it's basically becoming like 60 cents on the dollar, essentially. The
Right.